to Watch Your Assets, where we've got your money on our minds. I'm your host, Stephanie Bracken, as always, and joining me today are two fabulous guests that are taking up the real estate space. I'm so happy to have them on. So, welcome to the studio, Max Jergel and Nicole Grimm. So, Max is a real estate agent with Berkshire Hathaway. And then Nicole is a mortgage loan officer with Movement Mortgage. And typically, I like to start out by letting my guests give a little background about themselves, how you got into the industry, and what your outlook is for your career and for your future. So Max, I'll let you take the lead.
Sure. So I started real estate. I got my license in April of 2022. 3 years into it now. Uh, Before I started that, I had 9 to 5 jobs. I was bartending. Didn't really know what I wanted to do. Um, I did a side business with social media. Ended up helping out real estate agents and real estate brokers. So that kind of piqued my interest into it. Um, Started taking classes, got my license, and just jumped headfirst into it. Um, I yeah, I got my license in April 2022, sold my first house in June 2022, and I joined a team off to start. And for those of you who don't know what, whenever an agent joins a team, this thing moves. Um, for those who don't know, when an agent joins a team, they join an agent who produces a high amount of sales. So they get leads under them. They're kind of taken under their wing. You learn a lot faster than you would on your own. So I was on a team for a year, then left in July 2023 and have been on my own and just been building myself up ever since. I hit the ground running and it's been great.
Yeah, that's wonderful. Thank you. Nicole, how about you?
So I've been doing mortgages for about the last 14 years, and I work alongside my husband, Michael, and we're both licensed loan officers. So that happened back in 2020 during the COVID era. And actually, it kind of happened by accident that him and I worked together because a lot of people are like, how do you work with your spouse? Like, are you nuts? And like, truthfully, we thought at first that there would be no way that we could work together, but COVID shut everything down, right? So while Mike was transitioning into getting into mortgages, we were stuck in the house together and working together on loans. And he was helping me with my pipeline because he was very new. So I was basically training him. And that was not the original plan. He was going to be trained by somebody else. But because COVID, had shut everything down, I ended up being the one training him. And what we found out was that wow, do we work very well together, not just, as partners in life, but also as partners in business. Mike is very much the complete opposite of me. So the areas where I needed help improving in my business, Mike filled that slot just absolutely perfect. Like he's the finishing piece to my puzzle. So we've been working together since, 2020, and it's been a wonderful journey. And we look forward to many, many years of success in the mortgage industry. And I will say, meeting Max, he was on a team, but whenever I met Max, wow, is there somebody that, can really shine on their own? I thought, Max is just such a spectacular agent. And working with him for the last several years, he is so organized and consistent and on the ball with his clients. So we love working with Max every opportunity that we get. So
Wonderful. So you two work closely together. Can you sort of describe the relationship of how, you guys will work together on a sale or a purchase?
yeah, absolutely. So typically, Max is really he's the quarterback of the transaction, and I'm a part of his team. And when he works with a buyer client, he'll reach out to his buyer client and, of course, suggest financing recommendations, and that's where Michael and I will come into play, and he'll introduce us to his clients. And then we'll take the lead there with the mortgage side of things to get his clients pre-approved, make sure that they feel confident on their mortgage loan program, on their payment, on their price and budget. We share all that information with Max so then he can make sure that he's showing his clients homes that are relative to, what they're actually looking to spend.
It's really one of the first steps that I want to make sure that I cover with all of my buyers or anyone who's interested in buying a home, don't necessarily know their buying power. The first step is to always get pre-approved. So if they aren't already working with someone or have someone in mind to help them with that process, Nikki and Mike are my first go-to. And it's been amazing working with them as they they handle everything on the back end that, like, I don't have to babysit them or monitor or, like, ask, "Hey, what's going on?" That they have everything under control. So they've been working with you guys for what, like a year and a half now? It's been amazing.
That's awesome. Talked about getting pre-approved, so I'm thinking maybe we just go right into that of the process.
The pre-approval
Yeah, the
process?
pre-approval process. So whenever you're first looking to buy a home, what are those kind of first steps that you should be taking as a buyer if you want to buy a home?
Sure. So, pre approval is definitely step one. But even before that, what I encourage my clients to do is you really want to sit down if, you're buying a home with your partner or if it's just you and really think about like, where do I want to be at monthly? What am I comfortable spending per month, including my taxes, insurance, any homeowners association fees? Like, what do I want to spend? And there are a lot of clients that'll reach out to me and they're not really sure. And that's okay if you're not, but really try to think about that so that I can help tailor the numbers for the pre-approval around what you're comfortable spending per month. Oftentimes what happens and what I tell my clients is the pre-approval gives you a textbook answer to what you're actually, qualified to buy. But oftentimes what happens is most people will qualify for an amount a lot higher than what they're comfortable spending because when we look at your income, we're looking at your income before taxes. So we're looking at your gross income. So some people might be like, whoa, I do not want to buy even close to my max number. Other people are like, yeah, like I really don't, I'm a homebody. Like I'm totally fine with, spending half my income a month on my mortgage. Like I don't really have plans on going anywhere else out of my house. And that's a very realistic personality. So everybody is different. So I always like to encourage my clients, like, really think about that, monthly where you want to be at. And then also, try to plan, save every month, be diligent about it and make sure that you're putting a little bit away so that every single month that savings account is building and growing so that you have not just enough to be able to cover what you need for your closing costs and your down payment, but you're also set up moving forward after you close and you have a reserve to be able to cover the things that might occur with homeownership. It's not just I have bought my house and that's it. There's maintenance. You're making a financial investment in a home. And if you're using every dollar you got to cover your closing cost and your down payment, you're really not ready yet. You have to make sure that you have reserves left over to maintain that asset that you're buying.
Yeah. Max or Nikki, whichever one, what trends are you sort of seeing in the markets right now? The sellers and the buyers market, because I think of course those are gonna be 2 different things. I don't know if it's considered a buyer's market or a seller's market right now, but I'd love to hear more about that.
Um, you mind if I go first?
Yeah.
Um, it's definitely whenever 2025 started, at least for me, what I was experiencing, it was right out the gate, everything was ready to go. Buyers are ready to buy, sellers are ready to sell, which is weird for the beginning of a year. People don't usually like to move in the winter. Um, After the first quarter, though, things have kind of slowed down a bit. Inventory's a little low. Um, and buyers can now be a little more picky with what they want to buy. So it's really more of a buyer's market because it puts them in more of a uh, stronger position to negotiate.
Mm. Are you finding that houses are going as quickly as they were, like, pre-co or during COVID? Or are they staying on the market a little bit longer? Because I remember looking on Zillow, seeing a house go on the market, and literally the next day, it's under contract. So it's that time was crazy, and I don't know if that's still the sentiment now or if houses are a little more easily shopped because you have more time.
It really varies depending on the house.
Okay.
Um, you do still see that situation. I actually was just out with a client last night. We were scheduled to see the house on Friday. We went yesterday. They already had multiple offers. So it can happen. And that then that's not as common as it was during COVID, where every house is just going like that. No, the majority of the houses are sitting for a couple weeks, maybe a month. Um, but there are still houses where it's multiple offers as soon as they hit the market. It really just depends. Um, there are three factors that go into pricing a home for it to sell quickly: is location, condition, and your price. So if those all line up, then maybe you can get that situation, but it really just depends.
Yeah, I think what I've been seeing is that there has, and this has honestly been years in the making, is just pent up demand on the buyer side. And of course, I'm a little bit biased because I basically just work with buyers. But what I'm seeing on that buy side is that there is so much pent up demand because what we have is a market that is really ready to jump when interest rates, I think, get close to that low 6%, like high five range. I mean, if we see anything 6.375 or lower, like, and we're going to be approaching that territory, I think. If we see anything like that, like the floodgates are going to open and we're going to have so much buyer interest where we could very realistically see conditions like we did back in the COVID era because we simply don't have enough inventory to keep up with buyer demand. And especially with builder sentiment being a little bit on the lower side right now. So on the existing construction side, we're low inventory. And then also on the new construction side, we see builders kind of slowing down a little bit. But another thing I think weighing on the market right now is just generally what's going on, I think, with tariffs and, how that can impact the cost to build and how that can impact interest rates and what the Federal Reserve is going to do ultimately with cutting interest rates because tariffs are going to increase the cost of items, right? And I think it's been the Fed's main objective over these last couple of years to really try to get inflation down, right? And I think so far we've definitely seen success in inflation coming down, and that would lead to eventually the Fed starting to cut interest rates, right? But if we start to see something that adds inflationary pressure to the market, then what could be the direction of the Fed? And I think if you listen to the commentary of a lot of the Fed members recently, that you'll see kind of a mixed bag of emotions there with the Fed members as to the direction that they might go relative to interest rates. So.
Do you think interest rates, or maybe this is a little too speculative, but do you anticipate interest rates going back down to COVID levels to 3%, or do you think they might just stay in that, 5, 6 range on the lower end?
No, I don't. I don't see interest rates going back to that COVID level era. With a 30-year borrowing rate having a two handle in the front of it, I mean, it was free to borrow basically. And what you had was completely like unique market conditions at that time because we had shut down the economy globally, so we had an event that had occurred that really required drastic measures from the Federal Reserve where they cut interest rates to zero, right? And they really freed up the borrowing ability of the general public and businesses to really try to help steam up the economy at the time. But right now I don't see foresee that being the case. Do I think that our economy is under pressure? Yes. Do I think the labor market's under pressure? Yes. Do I think that could lead to lower rates? Yes. But will we ever see, that 3%, 2% handle for a 30-year borrowing length fixed? I mean, it would require, substantial stress within the economy for the Fed to make that type of decision again, I think.
Yeah, makes sense to me.
No, I mean, she said everything that I was thinking too. It was such a dire situation with the economy and with COVID that it required, dire solutions. So we got the 2.5%, got the 3%. This was before I was licensed, so I never even got to experience that economy and that interest rate as a real estate agent. Um, I think interest rates are leveling out now. So it could be going to that 5%, that like, 5.5 or lower six, but to get down to a two again would require something like crazy.
Mm, mhm. Yeah, that's very helpful. So let's stay on interest rates and, financing options. So let's talk about the different types of loans that are available whenever you go to purchase a home.
Sure. So there's four main types really: a conventional mortgage, an FHA mortgage, a VA mortgage, and a USDA mortgage. So those are the four main types of mortgages. And then within those loan types, you'll find a varying degree of options where you might get down payment assistance or the ability to maybe rehab a home. Things like that. But the most common loans that you'll see in the marketplace are conventional mortgages and also FHA mortgages. Those are the two primary mortgages that you'll see people take out to uh, finance a home.
Yeah. What's the difference between the two?
So with a conventional mortgage, the minimum down for first-time home buyers is 3%. For FHA, it's 3.5%. The biggest draw to FHA for first-time home buyers is that low down and then the ability to ask for seller's assistance with closing cost up to 6% of the purchase price. So that really helps to lower the total cash out of pocket. But it's also that FHA loans are a lot more flexible with credit score than what you'll see on the conventional side. Your conventional buyer is going to be somebody who has great credit, usually like 680 or higher, and that has a little bit more to work with in terms of closing costs. Your FHA buyer is going to be somebody who, maybe their credit's not perfect. They don't quite have, a ton of money saved. They need a little bit more help, getting into the home. That's going to be a more accommodating loan program for someone that, needs that extra boost basically to be able to purchase a home.
And most people, if I can add, aren't aware that there's different types of loans. I think, and I'm sure Nikki, you can attest to this too, that if I'm talk to someone about if they're ready to buy a home, especially if it's a first time home buyer, they think, oh, I don't have 20% down. Like that's just automatically what they need to have. And no, there's many different options out there, especially for someone who's buying a home, first. It depends on your credit score. There's, there's multitude of options. But it just depends on your situation, really. But a 20% down is not necessary.
We see that all the time where people think that they have to put 20% down to be able to buy. And there are so many situations with my clients right now that they might have 20% to put down, and I'm advising them not to, because really what we're looking at is your overall cost to borrow versus your rate of return on alternative investments. So we have to strategically look at, if you're putting 5% down versus 20% down and the difference there in what we need, can you make a higher rate of return than the cost to borrow if you take those assets and reinvest them in something else? So strategically for most first-time home buyers, as long as you're comfortable with your payment, I'm telling people, you're probably better off just putting the lower down, especially if you have great credit. People freak out about mortgage insurance, PMI.
Yes.
People freak out about that. But if you have good credit, it's so inexpensive to have that PMI on your loan, and the cost for the PMI is likely way less than what you would see as a rate of return to just have your money invested. So it makes financial sense. It's good financial sense actually to put less money down, have that liquidity there for you to be able to have invested, and then maybe if you want to buy other real estate, you have that, or if you want to do something to your home, renovations to your home, you'll have that money that's going to be invested and making money for you more than your cost to borrow. So when I bought my first house, that's what we did. We put, minimum down, and I'm so glad that we did that because it freed up, our assets to be able to reinvest and then to be able to buy additional real estate.
Yeah,
So
absolutely. I feel like and correct me if I'm wrong, but I feel like the 20% down and being scared of mortgage interest is a little bit of an old school mindset where, I don't know, my parents' generation, like they were told 20% down because maybe there weren't as many options to financing and mortgage interest was a big deal in the past, but anymore, it seems like it's not as big of a deal. So to your point, you can afford to put less down, and we have the same conversations with our clients of people who even wanna pay their cars off. If they have a low interest rate, we're like, "Don't do that and just
right?
reinvest that money in the markets. Let it grow because you're gonna outperform what you would have saved on interest."
100%. And I think it's that no debt mindset, where y- you might, like, if your savings account is making you 4% and your car loan is costing you 2.5, like mathematically, it does not make sense to pay off your car loan. It makes sense to invest your money, just pay minimum, toward your car loan. So same principle, with the mortgage. And I do really think it is that no debt is the way to go mindset, but that's actually really not the best case scenario. It is all a numbers game.
Yeah. So should people think of their homes as an investment, and why or why not?
Um, do you want to touch on that first or?
Yeah, of course. Yes, people 110% should think of their home as an investment. And one of the main things that I encourage my clients to look at is not just how much you're investing into the home, which is your down payment, that's your initial equity, right? So if you put 5% down, it's like putting 5% from checking into savings. That is your equity, that's your money. Whenever you go to sell the house, you will get that 5% back and then some. It's the and then some that you also want to educate yourself on, and that's the appreciation that you're going to see on the asset, on your real estate throughout time. So, for example, you can look at this, you know, from an example of investing into the stock market, for example. So, let's say you took $20,000 and you invested $20,000 in the stock market and you saw a rate of return that year of 10%, which would be awesome, right? Everybody would be super excited. You got 10% rate of return. So you would see a $2,000 gain, right? So if you take that same $20,000 and you invested that into, I don't know, a $400,000 home, and let's say you saw a 3% rate of appreciation on your real estate, which Max, you can, I'm sure, attest to that 3% is a historically low rate of appreciation annually, and real estate's only declined like 7 times over the last 75 years. So historically, real estate is an incredible investment. So if we're seeing a low rate of appreciation at 3% on 400,000, that's $12,000. So that is why real estate can be such an effective wealth building tool. You have $20,000 you invest in the stock market, you make 10%. You have $20,000 you invest in real estate, $400,000 piece of real estate, and you make 3%, and you're making so much more money. But that's what a lot of people tend to get hung up on, is that, they think, well, they're seeing the rate of return, that 10%, thinking that it might be better to just put in the stock market, but that's actually, not necessarily the case. Real estate can be such an amazing wealth building tool.
Absolutely. And I have this conversation a lot, especially with first time home buyers, because they don't realize that their first house can be an asset to them, especially whenever they're ready to move on to the next chapter of their life and they have to sell this house. You do things to get your house, to increase the value of the house. You do your renovations and you do additions and everything over time. Um, but it can be a huge asset to you, and that will all build up over time. And there's also investment properties as well. I've worked with a couple investors, and that's kind of a different uh, conversation. As do you look at real estate as an investment? Yes, obviously you do. But, regardless of your situation, it is definitely an investment, whether it's an investment property or it's your house that you're living in. Treat it as your house, but it's still an investment into your future.
Absolutely. And I think too, it's also a really great estate planning tool. You're building up your estate as well. So it's not even just wealth for yourself and building up your own net worth, but now you're potentially building up the wealth of the next generation. If you have a family farm, if you have some kind of other real estate property that you want to pass on to the next generation, that's again, if even if your kids sell a $400,000 house, that's better than a $20,000 investment potentially than that if it has appreciated, even over 30 years, that still may not equate to that whatever that house is then worth if the parents bought it for 400,000. So it can be a really powerful way to put some more assets in your estate as well. So thank you both for that.
Sure.
Um, Max, do you notice any trends in your buyer's outlook or even just in the market in general for actually the buyers or the sellers market?
Sure. As I said a little bit ago, it's really the market's really shifting into a buyer's market. The inventory isn't as high, and so we have some buyers that want to buy, but there's not a lot of options right now. Um, so it does put them in a little bit of a stronger point negotiating. But it gets difficult for buyers to be happy with their choices because there's not a whole lot right now. And that could be good for a seller too. But if it's, uh, excuse me, um, that could be good for a seller too, since the inventory is low. You contribute to it. You could be getting a multiple offer situation, but it's not as common right now.
Yeah.
So as of right now, it is shifting more into a buyer's market. Hoping to see that kind of shift back more into a seller's market as the inventory increases.
Yeah. Do you ever find that you have to dissuade people from buying?
Um, Not dissuade from buying completely, but maybe telling them now's not the right time.
Mm.
And that's after, talking to them about what their goals are for real estate and what they want. And also after they talk to Nikki and Mike too and see where they stand financially. They may want to get into their first house or they may want to go to their next house, but financially might not be like the best time. We may want to take a year or so to save up a bit more. So you're not as pressed for money. It's not all going towards closing costs. Because if you just put all your money towards closing costs and then your furnace breaks down a month later, then what? You just want to make sure that you're set up properly.
And we've seen people where, being in the business as long as we have, we've had clients that have made, that decision to kind of rush into buying.
Go all in.
And then something happens and they can't afford the repair.
Yeah.
Real estate is, you're making mainly a six-figure investment on something. You have to make sure that you have a reserve account to be able to maintain your real estate. And this is a year over year thing. There's going to be things that you have to do to update your home and to make sure that you have enough to be able to cover those things. And if you're using everything that you have to be able to buy the home, you might not be ready yet. I always tell my clients there's no such thing as a red light at pre-approval. Doesn't
Mm.
exist. You're either at yellow light phase or green light phase. If we're at yellow light phase, you might have to work on your credit. You might have to save a little bit more. You might not have the employment history you need. You might have some homework that, we have to do to get you ready to buy. And that's okay, before we turn that light green.
Yeah. That's wonderful. I never even thought about that. Like, that's because I've heard people say you're house poor, and I'm sure that's kind of what you're alluding to there is if you only have enough to make your monthly payments, but you have nothing else if something needs to be repaired, then that might not have been the right time to buy, like you said.
Yeah.
And
No,
I've
not at all.
yeah.
And then if you don't have the money to take care of your house, then what are you gonna do? It's get you know, get foreclosed on.
Mhm.
Um, the the value of the house or not the value, but, if you can't, afford to take care of things, then it just looks awful
Mm.
and, your house starts to fall apart, and then what? You've invested all this money into something that's deteriorating.
Yeah.
Yeah, and for my first time home buyers out there, what we want to see you do is be set up for success. We want to see you really have your home be an amazing asset for you moving forward into the future, for you to be able to sell and to buy another home, or give to your family, or to start investing in other real estate and as an investor. We really want to set you up for success. And the way to do that is to make sure you have to have some skin in the game. So there's a lot of programs out there with down payment assistance and things like that. But I think what's important for buyers to know with down payment assistance is that that's recorded in the background as a soft second mortgage. So if you don't have enough to cover even down payment, there's options out there where you can get assistance, but there's like occupancy terms that are required with those. You might have to live in the home for 5 to 10 years before it's forgiven.
Mm.
And then it's just hanging out there as a soft second mortgage. So if you want to refinance or you want to sell, that's hanging out there in the background. And that's going to have to be paid off if you're selling or refinancing prior to that occupancy term. So that impacts your equity position as a buyer. The best thing to do is to start off with at least, that 3.5% down, and give yourself a little bit of skin in the game. Because as you guys know, when you start making your mortgage payment right away, a big chunk of that payment is, going to interest. So it takes you a while to, build that equity up to maybe get yourself to that point where if you do sell, you're going to be making some money, which is like a nice segue into real estate is not a short-term investment. This isn't something where you log into your account and you're watching a stock trade, day by day. This is something where, real estate's something you're in for the long haul. Usually, like if you're putting minimum down or you're investing in real estate, we typically will want to see people at least hold on to their home for probably 2 years, before they break even on that initial investment on their closing costs, to buy the home with the appreciation that they gain. So that 2-year period is like usually that break even mark. Past that, then you start to get into the green.
Yeah, that's awesome. So I guess along those lines, and we may have already covered this with both of your answers there, but do you have any other sort of common mistakes or maybe advice for first-time home buyers that you either see or can recommend?
Mm. A couple. Uh, Especially for first-time home buyers who don't have a whole lot of money to play with, like they do, but we're kind of cutting it close. Um, don't skip over any kind of due diligence that's costly that you're skipping over simply because it's a cost. Like if you're going to skip over inspections or you want to waive an appraisal, I mean, you're doing this essentially to make yourself feel safe about your first investment. If you're looking at all of those steps just because, oh, well, this is just more money, I can check out my house myself because I'm kind of handy. Um, Maybe you aren't ready yet. That's something I've experienced a bunch with first time home buyers, but that's on my end. I mean, I'm sure you've experienced a lot too.
I think for me, on the first time home buyer side, what I see is renting is better than buying or it's more affordable than buying. And the truth is, you're paying somebody's mortgage,
Yeah.
like, already. Your rent, like, your landlord's not taking a loss on your rent.
Yeah.
So, you're paying somebody else's mortgage, period. Like, you're making somebody else money. So, if you have the opportunity to be able to go and buy a home yourself, the sooner you can buy, the better. People always ask, "When is the best time to buy?" 5 years ago. That was the best time to buy. You should have bought 5 years ago. That's when you should have bought. And every single time back when rates were, 2%, I had people saying, "Is it a good time to buy? Are you out of your mind?" Yes, it's a good time to buy. The interest rates, it's free. It's free to borrow. Yes, it is a good time to buy. It's always a good time to buy real estate. And we talked about just previously the last 75 years, we've seen a decline in value in real estate, like 7 out of the last 75 years. I mean, it's historically, one of the most safe investments that you can make. So that's something that I see first time home buyers, they sit and wait and sit and wait way too long. And then they end up paying more money. And there's not one person that you would talk to that is out there buying real estate right now that wishes that they didn't buy real estate 2 years ago or 3 years ago or 5 years ago. They wish that they would have bought. So, like, my advice to anybody that's thinking, like, when do you think is a good time to buy? The good time to buy is whenever you're financially ready. That's the best time for you to buy. When you have enough saved, when you feel comfortable, that's the best time for you to buy. Don't time the market. You'll never be able to,
It's the same in the stock market. You can't time the stock market. There's because you have to be right twice.
right?
Right when you get out, you have to be right when you get back in. So I imagine it's the same exact concept with real estate. It's just whenever you're financially ready, it's go time.
Yeah.
Yes,
Oh.
exactly.
We haven't talked too much about selling a home. I don't know if you want to speak to any of these questions, but I certainly can ask.
Sure.
Okay, cool.
Absolutely.
So what are the most important things a seller can do to get the best price?
Um, I mean, general maintenance of your home, just making sure that it's not falling apart, making sure that everything's working. I think every time that I have a listing appointment with someone who wants to sell their home, I have a whole list of everything to help them get their house ready. If we need to paint, what's the outside of your house looking like? Do we need a pressure wash? It doesn't have to be perfect, um, but it does have to be enough
Yeah.
because, you're putting something on the market for everyone to see. And if you want a situation where you're going to get the most for your money, then you got to put a little bit of work to it. We're not just going to put it up as is unless the situation calls for it and you're in a drastic situation. It is what it is. But, you want to make sure that you're taking care of your house. If we need to paint, maybe let's think about neutral colors. Uh, there's a whole bunch that goes into it. Making sure that the roof is not too old, making sure how old are your utilities. And if there is something that you need to address, then maybe you need to be a little more negotiable. You have to be able to understand your situation, what you're in, um, and see how the market responds to it. If some people get a little stubborn and say, nope, my house will go, but they haven't taken care of everything that they really need to. And maybe they have to give a credit to address like the furnace or the water heater or the electric. It just, your house is never going to be perfect. There's no such thing as a perfect home, but general maintenance of your home and adding additions to it, renovating, stuff that you can do over time while you've been in it will definitely increase the value.
And painting and pressure washing, I mean, those are 2 really inexpensive ways to update your home just as it is.
Very inexpensive and they make a world of difference.
Yeah, they really do.
Especially a neutral color that just brings in a lot of light. Everyone wants natural light now.
Mhm.
So it's just little things that you can do that will catch people's eye.
Yeah. How do you price a home in a volatile market?
Hmm.
If you can't answer that, we can move on.
It's I don't know if I've experienced a volatile market
Okay.
only being in it 3 years. The best thing that you can do is really just look at the market around you and the houses around you that are selling. Um, Look at the comparables, you know, what the houses are going for, what they look like. Uh, talk with your realtor, listen to their recommendations on what the situation is and what you can do. Um, but yeah, I don't know if I've experienced a volatile market like that yet.
I think what we've experienced over these last 5, 6 years has been a market where we've had so much buyer interest because we've had so little inventory out there where people think I can't stress how important it is to work with a good real estate agent because they're going to help you pull comparable homes that are like yours help you determine what the value is, which is going to help you get the most bang for your buck. Just throw in like a lot of people that I talk to, and because I work with people that are selling and buying at the same time. So a lot of people that I talk to, their game plan is to try to list their home for as much as they can and hope that they're going to get that amount out of it. But the truth is you're actually doing the exact opposite. What you're doing is you're deterring people from coming to look at your home because it's overpriced. And when you overprice your home, you're going to attract somebody who's coming to look at your house that's looking for a deal. So they're going to be haggling you because they know that your home is overpriced. When your home is overpriced, what happens? It
It
sits.
sits.
And when it sits, then you have to reduce the price. And then when you're reducing price, you get that negotiating mindset that comes in and they're looking for that deal. This home has been on the market for a while. It's probably been on the market because it's overpriced. And, they're going to come in and they're going to try to lowball you. So the best thing to do is you have to find that sweet spot with your price. And I think that Max can attest to that, like making sure that when you list your home, it's at that perfect spot where you're attracting interest, but you're also not overshooting it so that, like, people think that it's overpriced and then they're trying to come in and lowball you, you
Exactly.
know?
Finding the sweet spot, it really is like the key to making sure that you're getting what you want.
Yeah.
And it may not be, what you had thought at first, but, listen to what your realtor is showing you, showing the comparable homes in your area and everything, and try to find somewhere in the middle, maybe even lower if you're trying to get a multiple offer situation. Not saying that it's guaranteed, but it could happen. Um, an important thing too is to you know, make sure that you're interviewing your realtors too as you're talking to them. A lot of people just like, oh, my so and so's, he's been my friend for years and he can be my realtor. That doesn't mean he knows all the experience. Make sure you're talking to and listening to what your realtors are telling you and not just telling you what you want to hear, giving you sound advice.
Yeah, absolutely. And I mean, I'm not in this profession, and so I want somebody who is a professional, who's been there before, who knows what to look for, who's going to go to bat for me, who can really speak to, "Hey, I think we can find something better if this is your price point, we can look at other comparable homes like you just said." So I want that person to be able to go to bat for me and be the voice of reason too.
Yes.
Yeah.
No, and it's important to say, even, whenever the house is on the market, someone comes out and gives you a low ball offer and say, no, that's not even what this market is looking like. This house is worth this. Look at the homes around them. In an ideal situation, your seller would listen to you, but that's not always the case. Um,
That's very true.
there are definitely situations where sellers and buyers, you could tell them all the facts that you want to until the cows come home, but they're not always going to listen.
Yeah, people have their own prerogatives, so I guess you just like, what do you do in that situation then?
Um, I, for as far as a seller goes or a buyer goes,
Either way.
I've had sellers where, their price is a little high, mine's here. And if they're not in a rush, to get into their next home, just say, you know what? We'll try it your way first.
Mm.
We'll give it a couple weeks. Let's see what the feedback is. But this is what the market is showing, and this is what I recommend. After, say, 2 weeks or a month, you're not getting what you want, then let's go to my solution and see what we can get there. But then there is also when I've been in appointments where we're not just like 20 or like 30,000 off, we're over $100,000 off.
Oh, yeah.
Oh my gosh.
Hmm. And I don't know where they pull the number from, but they're stuck on it. And you just have to say, you know what? Maybe I'm not the realtor for you.
Okay.
I think from a value perspective, what people have to try to put in their mind is there's going to be an appraiser whose job is to come out and assign a value to your home, right? Because most of the time, even if you have a cash offer, you might still have someone that wants an appraisal done because they'd be nuts not to. They want to make sure that the home that they're buying is worth what they're agreeing to pay for it. That's the whole purpose of the appraisal. So you have a third party opinion and value that's being done on your home, and what the appraiser looks at is comparable homes like your subject in the same condition as your home. So they're trying to find that home that's very similar architecturally, that's within a mile radius in most cases, unless your property is rural, it's a little bit different, but within a mile radius in the same school district that's similar condition. That's what they're looking for. And that's what your realtor is doing is they're educating you on here's the last 3 months worth of sales. And if your realtor is pulling sales from a year ago or from 2 years ago to try to get you the value that you want, I can assure you your home will not appraise and there's going to be a problem.
An appraiser
So
typically doesn't even look at sales from a
they
year ago.
won't.
They will,
Nope.
what, at the most
3 to
6 months?
6 months.
Oh, so if any data is past that, it's not even good.
Mm. Wow. What are some of let's maybe do one crazy story that you had, like the worst sale, the worst buyer, like what does that look like?
Oh boy. How much time do we this wasn't a worse buy, but it was this year,
Mm.
and the sale took the entire first quarter. I met these people at an open house. They're a lovely couple looking, to go to the next chapter of their life where they're not necessarily downsizing, but all the kids have left the home, so they're resizing. Um, I won't say downsizing because the house that they bought was bigger.
Mm.
But all the living was on the first floor.
Okay.
They found a house that they really liked. Um, the house had been on the market for, gosh, 6 months at that point, 5 or 6 months. Um, and the people who owned the house only had the house for 2 years. It was, in my opinion, it was very overpriced. Once we put in an offer, we learned that they put X amount of money into it, so they had a bottom line that they needed to hit. Um, Negotiations going back and forth with everything took about a week for and my buyers just said, "You know what? We love the house regardless. We'll just meet them at where they need to be." That was great. My people were also in the situation where they had to sell their house in order to buy. So we get their house on the market and we had multiple offers because we looked at all the comparables, we priced it just accordingly, and it showed very well. And we had two offers and went with the highest and uh, got it under contract in less than a week. So while it's under contract, the buyers for their house originally submitted their offer with a home sale contingency, meaning that they can't buy my people's house until they sell theirs. I said, we're in multiple offers. My people don't want to entertain that. We have another offer on the table that doesn't have that. So they changed their loan around so that they don't have a home sale contingency. After underwriting, it turns out that uh, the bank would not even permit them to buy the house without selling their house first. So now we had to get their house on the market, and I'm not even doing this. I have to wait on another agent to do all this. They get their house on the market, and it's sitting a little longer because it's priced higher. Um, they got an offer, and it gets under contract. Then the deal fell through. Then they get another offer a week later. The negotiations were a little tricky, as I heard. Um, I'm not involved in it as an agent who's not really, on either side of that deal, but I have to at least know what's going on. So basically, we had four deals in one. So we had those buyers' house, uh, or three deals in one. That buyer's house, my people's house, and then their new house, all in one day.
Wow.
And then the people who were selling their new house, the husband was buying a house that day too. So it was a very long day.
Domino effect. It's very much like
It's
that in real estate.
Yeah, that is something that, going back to market trends, I'm seeing a lot more home sale contingencies now too.
Definitely. I think it's the affordability of housing that we're starting to see that, if someone has a mortgage already and that mortgage is $2,000 a month, and then they're looking to upgrade and their new mortgage is going to be $3,000 a month, they have to qualify with a $2,000 a month payment plus a $3,000 a month payment plus all of their other debt. So that's something that the mortgage lender will look into is their overall debt to income ratio. So it definitely could be um, something where we're seeing more home sale contingencies because of overall affordability, with real estate where it's not like it was 5 to 10 years ago from an affordability perspective in terms of prices of homes. So we are definitely seeing more home sale contingencies. We try to qualify our clients that are interested, without that home sale contingency to make them more marketable if possible. But that's where it comes to we are in a solutions based business. Our entire day is designed around trying to figure out a puzzle to make a transaction go together and to work and to get to the finish line on time. And that's why working with a good lender, an experienced lender, somebody who knows what they're doing and someone who's honest is so important because the lender who likely worked on Max's disaster deal knew that there was an issue with that client being able to qualify. And the solution to that would have been you make your offer with the home sale contingency or don't make your offer. Or we try to get a co-signer. Maybe you have a family member that'll temporarily co-sign with you and we can refinance them off down the line. So you try to figure out all these different ways to make that transaction work. And I would imagine that that was something that was known from the very beginning. And then, it doesn't come up until you make it through the underwriting process. And then that bad news is delivered. And it causes this domino effect within the transaction to where it's not just impacting one sale, but it's impacting multiple sales.
And everyone is stressed.
Everyone is so shut out. Yeah.
It really was just
You have
like super
moving trucks
stressful.
ordered, and you have utilities being turned on, and you have all of these different things. You have like movers scheduled. Like all of these different pieces are in motion, and if we don't meet our timelines, like I tell my clients all the time, these dates on this contract, they're not suggestions.
Mm.
They're deadlines. We have to meet these dates and they're extremely important. So if your loan application is due in 7 days, we are getting this done in 5. We're getting this done sooner because if we wait until the very last minute, you know what you're going to feel the entire time?
Chaos.
Rushed. You're going to feel rushed. You're going to feel overwhelmed. We don't want you to feel overwhelmed. We need to make sure that we're getting everything done ahead of schedule so that when we get to the very end, you're cleared to close. And all we're doing is we're waiting on those final figures to be balanced. And you guys already know you're good to go. You're cleared to close. We're just waiting on those final figures so you could go get your check.
Yeah. It's amazing. What about your crazy story?
My crazy story is a little shorter. So I have had, oh my goodness, in my over 10 years in the business, some just mind blowing situations. But we have had clients. I had a client once who quit his job middle of the transaction. And we thought, well, okay, maybe he had, because we send out like a list of things like, do not do this,
Mm.
quitting your job is one. Go figure. And he quit his job middle of the transaction. We figured, well, maybe he has something else lined up. Like he probably interviewed at another company. He's, gonna start another job. We'll get an offer letter and everything will be fine. And I call him and I'm like, Mr. Smith, we heard that you quit your job. Do you have other employment lined up so that we can keep the loan going? You need to be actively employed to be able to qualify for your loan. And he was like, "No. No, I don't have any other employment lined up." I was like, "Do you have interviews scheduled? Like, what's going on?" And he's like, "No, I just didn't wanna work there anymore."
Oh my gosh.
Yeah. Just like mid-transact just no plans. I've had clients where on the same day of closing, they've told me later on in the day that they quit their job. So they just made a six-figure investment, quit their job, decided to work for themselves. Like, that happened within, like, the last 12 months. Yeah, I've had clients that have moved, like, across the country that have no like, they wanna move across the country. They have no idea where they're going to work. Like, they're not gonna be working remotely at their current job. They don't have new employment lined up. Like, they are making six-figure investment decisions with no employment lined up.
Oh my gosh.
So, like, that's just, like, within, like, the last 2 weeks, like, I've had those things, like, occur. So, like, my day sometimes is just like I said, we are in a very much solutions-based business, so every day is just trying to put the puzzle
Oh my
together.
god. Yeah, I'll say. And I mean, real estate aside, like quitting your job without a plan next, it sounds chaotic.
That's just gave
Oh
me
my gosh.
anxiety.
Yeah.
I mean, like, we've had people who have applied that have had collectively and I mean, I'm not judging anybody, but, like, we have had people that have applied that have had collectively in 3 savings accounts, like, $15, like, in 3 accounts, like, it's, like, broken up in 3 accounts.
Mm.
Like, there are things where you're just like, "Wow," like, I can't even believe that this is actually occurring. And we've had people out, like, looking at homes where they've had just some crazy stories with, like, sellers running into sellers that are, like, naked on the property, or
Oh my
the
gosh.
neighbors are out, like, sunbathing topless, and, like, we're getting calls about, like, "How'd the showing go?" "Well, I saw the neighbor's boobs today, so not
There
very
was
well."
showing something.
Yes, exactly. So, like, it's definitely there is never a dull moment in our business, like, ever. Every day is unique, it's a snowflake, every day.
Mm. Is there anything we haven't talked about that you think people would like to know about buying, selling, just about the market in general? Kind of closing thoughts.
Um, More of just if you're starting to look for a realtor and starting to get into that chapter where you want to start to buy your first home or you're getting to your next house. Um, I would advise interview realtors. Don't just, go with someone that you know because they're in it. Um, Definitely interview and feel someone that you work with someone that you feel like you can trust and that has your best interest in heart. Um, Make sure that you go through all the processes of getting pre-approved, making sure that your finances are in order. If you're selling, getting your house together and talking to someone about what you need to do. We're here to help you, with all those steps. Um, So it's more just making sure that you work with someone that you trust that can help you get to the finish line, and not just looking for don't work with someone who's gonna view you as a paycheck.
Mm,
We see that a lot in our business, I'm afraid,
yeah.
where we have people that, they're closing $400,000, $500,000 transactions and we can't get a hold of the realtor. Or like they're on a team and like we end up hearing from like someone random that's on the team that we never talked to, like the whole transaction, and it's days later
And they have no idea what they're
and they
talking
don't know what's going on. Like if I called the team lead, they wouldn't know what was happening. Like it's so important to really trust your realtor and your lender. I mean, if your lender is giving you a pre-approval letter and you have no cost sheet, like what you don't know what your numbers are. Like
Mhm.
you haven't looked at a payment breakdown, you haven't looked at a closing cost sheet, you have no idea what's going into buying your home. Western Pennsylvania is so unique. And I tell my clients that, like people that live here, people that are coming from, across the country to move here, Western Pennsylvania is unique. Pittsburgh's a city of neighborhoods. And depending upon where you buy, you could see very different real estate taxes, transfer taxes. You need to work with a local expert, someone that's going to be able to go through that cost sheet with you line by line, hold your hand. I've had people that have bought 3, 4 homes that have worked with us and said, "Oh my gosh, I've never had, such a smooth transaction in all of my prior transactions in purchasing real estate." And we do our best to try to educate our client and really hold their hand so that when they're looking at numbers from us, they feel comfortable. And also just the communication aspect to be able to reach out to us and to ask us questions, feeling comfortable, if there's something that they're not sure of. We try to hit on things multiple times. If you repeat it, it tends to stick a little bit better. But if they're not sure, to be able to contact us and have that comfort level there and trust, knowing like we're going to educate them and answer them accurately.
Yeah.
Yeah. It's important that an agent, a lender, everyone involved with the next step of your uh, transaction, your deal, is giving you all the information. You have to be as informed as possible. And if you're uncomfortable with anything that would make you move forward, then I'm not comfortable with you moving forward either.
Mhm. Yeah, it's a two-way street.
Yeah, you just need someone who has your best interest at heart.
Yeah. Well, if people do want to start the interview process, where can they find both of you to get more information from you?
Absolutely. You could uh, easily just call me or text me. My number is 724-316-9996, or you can send me an email at maxjergel@tprsold.com.
Amazing.
Mhm.
And for me, my cell is the best way to reach out. You can call or text me anytime. My number is 724-601-3059. And then my email is Nicole, Nicole .Grimm, Grimm @movement.com.
Wonderful. Well, thank you both so much for being here today. This was a lot of fun.
Thank you for
Thank
having
you for
us.
having
Yeah,
us.
This is
absolutely.
great.
Cool. And if you enjoyed today's episode, be sure to give us a like, follow. It's Watch Your Assets on all social media platforms, and we will see you on the next one. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA/SIPC.